Hello everyone, I am Manjula Devi P, working as Assistant Professor in GFGC Kanakpura. Today we will discuss about some of the aspects of investment management. So with specific, we will talk about the investment avenues that are available for an investor. So if we see what are the investment avenues available, we can broadly discuss as financial assets and real assets. So let's see what is the meaning of investment avenue and what are the different options we have when we talk about investment avenues. So investment avenue is nothing but the different channels or modes of making investment, the different channels available for the investment to make for the investor is called as the investment avenues, or in simple words, these are the different options available for the investor to make investment. So the different investment confer different set of risks, return and liquidity conditions. Very important. So though I have so many investment avenues available, options available, each one has its own inbuilt risk, return and liquidity conditions. Let's take one simple example. Suppose I usually ask it in the class, if I give you right now 1 lakh, what are you going to do to the students? You have to invest. It's not you're going to consume it. Okay, you have to make an investment. So students come up with different ideas. Some says I'll invest in shares, some says I'll invest in debentures, some say I'll put it in bank as a deposit, some says I'll start a small business. So likewise, each one comes up with different ideas. Now when you are talking about different avenues, so you must be aware that each avenue has its own set of risk, return and liquidity conditions. So some may be very simple where some are quite complex. That means some investment options may be very simple. Say you're putting your money in bank fixed deposit. There's no much complexity involved. You know for how many period, that means how many years you're putting your investment. You know what is the rate of return that bank is offering, and there are some documentation which you have to do. It's very simple. But at the same time, there are some investment avenues which are complex, where you have to do analysis. Say you are investing in the shares of a company and you are a new investor, so you have to do a whole lot of analysis, like what is the actual scenario of the economy, what is the condition of that particular industry, what is the condition of that particular company, what is the trend of the share value that has been observed in the market. Likewise, you have to make so many calculation analysis, and then you can take a decision. Whereas for some it may be quite simple and you can just take a decision easily. So anyway, we have to see all the types of investment avenues, what are available and what are the risks and returns attached to it. So as I told, the investment avenues can be broadly divided as real investment, that is investment on real assets, or investment on financial assets. What is the investment on real assets? Okay, most common investment, and like which doesn't need much analysis. Of course, it needs analysis. You have to see, but still, comparatively compared to financial assets, you have comparatively lesser analysis to be done. So what are the things which are involved? Basically, real assets involves tangible assets, like you are investing in land, you are investing in building, you are investing in machinery, inventories, or you are investing in asset like precious metals like gold, silver. And real investment or real assets also include intangible assets, like you are investing in patents, trademarks, goodwill, even that is also considered as real assets. So investment in real assets are needed to carry on day-to-day business. Like for running your business, say you need land, For constructing a factory, you need land, you need building, you need to invest in machinery, you need to buy inventories. Like these are the physical structure needed to run your business. Okay, that's why it is called as real assets. Investment in some real assets are also for capital appreciation. For example, land and gold. As I told, usually the investment in real assets is to run your day to day business. But at the same time, some of the real assets can also promise your capital appreciation, especially land. So you can see land is always on an inflationary trend unless otherwise an exception. So land usually, price of the land keeps increasing. Same way nowadays we are seeing gold rate, even gold, value of gold is also constantly increasing. Though they are real asset, but they also promise capital appreciation. Then what are the financial assets? Most important for our discussion. Financial asset is a liquid asset that represents and derives value from a claim of ownership of an entity or contractual rights to future payment from an entity. Again, a little technical. In simple word, if we talk about, basically these financial assets are in the form of liquid asset. That means you can convert it to cash anytime you can. That is called as liquidity of the asset. So here the value of that is derived from a claim. Suppose you have a share certificate. The share certificate value is not because of the paper, because of the claim that it has. It says that you have 100 shares worth this much face value from a company. That means it is deriving a value from the claim of an ownership from an entity or the rights to the future payment. Like you are investing in shares, you have a right to get dividend, you have a right to sell the shares to somebody whenever you want. So that means you are deriving a value from the claim of an ownership from an entity, or it is resulting in a contractual right. Again, a financial asset's worth may be based on the underlying tangible or real asset, but market supply and demand influence its value as well. So again, a financial asset's worth, maybe when we talk about a mortgage or when we talk about any, suppose you have invested, you have given loan through debentures, but the debenture is having a mortgage on a financial asset. That means though it is, it has a mortgage on a real asset, on a building or something. That means though you are making a financial investment in the financial asset, but the underlying asset may be a tangible asset. Okay. So stocks, bonds, cash, bank deposits are example of financial assets. The most important feature of financial asset is that they carry high market liquidity. Like as I told, liquidity means you can convert it into cash whenever you want. But if you are investing in land, in building or in machinery, it takes considerable amount of time to get converted, or there are many formalities to be followed for getting it converted into cash. But when it comes to these financial assets, so they have high marketability and high liquidity, where you can convert them into a liquid asset easily comparative to real assets. Then the method used for evaluating the value of financial asset is known as valuation. So we have a valuation pattern, valuation of bond, valuation of shares, how to find the intrinsic value of the asset, of those financial asset. We have a whole set of theory and application for valuing these financial assets. So in the real investment, what are the different options available? So real estate, which is land, building, or you can go on mortgages, you can buy machineries, equipment, you can buy commodities. Commodities could be, it could be any commodity. Like if you are dealing with, you may be buying rice, it could be a commodity. You are dealing with any other metal, could be a commodity. Then business ventures, you are investing in, you are buying businesses or you are selling your business, or you are making investment, you are becoming a part of owner for a business, even that can be considered as real investment. Again, as I have already mentioned, precious metals, you're buying gold, silver, or any other precious metals and stones, even that's part of real investment. Real investment can also be in the form of art, antique, and other valuables, where you are investing on the art or any antiques. Antiques are those old items which has its own value. Okay, so these are the examples of different investment avenues that are available in real investment. When it comes to financial investment, we have equity shares, preference shares, debentures, we have saving certificates, especially the post office releases NSC, National Savings Certificate. Then if you are investing in government securities or any other money market securities, short-term deposits or mutual funds, or financial derivatives. So financial derivatives we are going to discuss in detail in the coming session. We have something called as options, futures, forwards, swap. So all those of course are in the form of financial investment. Just to recap, so in this session we spoke about the different investment avenues. Investment avenues means the different channels or modes of making investment which are available to the investor. So the investor can invest in the form of real investment or financial investment. Real investment are the investments which involves the investment on land and building or any other tangible or intangible assets. When it comes to financial investment, it is in the form of purely on the marketable securities like shares, debentures, bonds, saving certificates, or marketable securities likewise. So these are the references, books I have referred. You can go through with these books which will give you guidelines about what are the different investment avenues which are available in detail. Okay. Thank you very much. We'll meet in the next video.